Hello, everyone, and welcome to our training today. So today we're talking about business credit and the coming recession. We're going to be talking about actually a lot of different ways you can get funding and what's happening with the funding industry during the recession or going into recession. And we're also going to talk about how you can still build business credit and an overview of that process so you can still get money even in the impending recession, even in the change in the economy. For those who don't know me, my name is Ty Crandall. I'm the CEO here at Credit Suite. At Credit Suite, this is what we do. We help business owners get money. We help you do so by building business credit for your EIN that's not linked to your social, by accessing all forms of capital in one place, and by also improving your fundability, the secret formula that lenders and credit insurers have to determine if you should get approved for financing or not. So we're going to start a little bit by talking about the recession, how that's changed the funding industry and landscape. We're going to talk about some other funding options, even an update on PPP loans with SBA and some other ways that you can get money and how that's been affected by the changes in the economy. And then we're going to wrap up by talking about the steps to build business credit about halfway through and what you need to know to be able to obtain business credit, even with what's going on. So, right, a lot of different changes of what's going on right now. We haven't specifically, I don't think, declared that this is a recession, although some experts are. But needless to say, dramatic changes in what's going on. I've learned through 2 recessions that, it's not the recession that kills you, it's what causes it that does. I was a mortgage broker in the mortgage crisis, so I was on the front lines of what's going on, much like we see bars and restaurants on the front line of what's going on right now, because, those are the type of industries, and you might be one of these industries that's directly impacted because your business is shut down. You can't even open. So there's been 5 major economic downturns since the start of the 20th century, plus several smaller ones, and some smaller downturns in hindsight were harbingers of the big ones to come. But the situation 2020, whole new ballgame, as we all know, because a lot of businesses overnight basically got shut down. I mean, life has radically changed, as we've all seen this year. Whether your industry was affected or not, your life has radically changed. As a matter of fact, in my 44 years on this planet, I've yet to see any one thing that has affected so many people so fast as this has. So one of the marked ways that it's changed is in the area of employment. A lot of people working from home now. A lot of people are, no longer working from offices. And I think that this is going to be a really positive impact on all of us. Credit Suite, for one, shut down one of our offices. We have 2, one in Washington State, one in Florida. And we shut down our Florida office because the reality is, historically, we were used to working from home. 70% of our team works from home, even with 2 offices. And the idea of somebody on our sales team getting sick and then making everybody else on the sales team sick makes no sense. But I think a lot of us are making that decision now. So we're actually getting away. We're getting into a new model of home-based businesses. We're reducing expenses because we don't have rent. We don't have leases. We're not purchasing buildings as much as we were. So again, a lot of different changes. And Andre says, Ty, what's up, man? What's going on? Thanks for coming in. And so a lot of different things are impacted. Even if you weren't an industry that was affected, more than likely a lot of these changes have actually impacted your business. So was a recession predicted this year? Well, yes, it definitely was. But again, the reality of it is anybody that claims they predicted this was probably somebody that predicted that this would happen the last year, the year before, right? A lot of people have been saying that we're going to have this happen for quite some time. And the reason is because this is the longest period, I think, in history that we've ever went in between recessions before. So a lot of us that are in this place are very blessed. And if you don't feel blessed because you're getting hit directly with COVID-19, I can tell you, being a mortgage broker through the mortgage crisis, that the lessons you learn right now will help you recession-proof your business and mitigate future changes in the economy way better than those that haven't been through this before. So the CARES Act, a little bit familiar. A lot of you are familiar with this. This is the stimulus plan, $350 billion initially released, another $150 billion released, which was really used to get us emergency funds to get us through this. Okay, a lot of different things that it did. Emergency loans to distressed businesses. We're starting to see some more talk of possibly more funds being available for businesses, some of them even in the form of grants that actually are money that's given to us to help pay utilities, rent, et cetera, through this. And we may see that depending on how long things continue to be shut down. The Fed is now just releasing a lot of the guidelines on the PPP loan forgiveness. And, it could have went either way. But luckily for all of us, it's gone our way, towards the small business way, where it looks like the majority of us that did get PPP loans, almost all of those funds should be forgiven if you use the money properly, meaning about 60% of it that you used for payroll and 40% used for expenses. We're still able to get a lot of that money forgiven. But a lot of us are now seeing a problem I said 90 days ago we'd have. people don't want to go back to work. When you're getting $600 extra on unemployment besides state unemployment, there's people $30, $40, $50, $60,000 a year on unemployment. And so I'm talking to a lot of business owners that are now facing that reality where their workers don't want to come back. And we have a restaurant that I love to go to in my local area called Flamestone. Love it. They're consistently great. The best steakhouse that I have in this immediate area. And man, they've really fallen on their standards. And this was the talk I was having with one of the owners. I said, I get it, man. Everybody's adversely affected. Whenever I go out to eat, it's never the same. He said, my entire kitchen staff is new. Nobody wanted to come back. So again, I think a whole new problem as a result of the CARES Act, where with all this new unemployment that people are getting paid, a lot of people don't want to come back to work. So some positives and negatives that actually came out of this. And Jennifer says, hey, from the Panhandle. Hey, Florida, nice to see you. And Eamon says, I'm in the bar industry. And Eamon understands that firsthand. It's hard to run a business when you're not even allowed to open, right? It changes your landscape dramatically. Derek says, hey, from YouTube. And Skip from Facebook says, nothing is more constant than change. It's very true. So the PPP loan, right? If you're not familiar with this, you should be. If you haven't already got this, you should get it, because now that things have died down, there's still $130 billion available. You can get 2.5 times the amount of your average payroll. So if we look at the last 6 months of payroll before all this happened, and we average out what your payroll was, you can get about 2.5 times that amount. Plus you can get a grant for up to $10,000 for what's called EIDL, or the Economic Injury Disaster Loan. So again, if you haven't tapped into this, you should. We've got information on our website, creditsuite.com/PPP. I don't talk about PPP a lot because when it first came out, I talked about it all the time. And then I think a lot of us got our information. And now most of you have already obtained the PPP. Now we're to the next section of getting it forgiven. But for those of you that haven't, you really need to take a look at that, because all these things here could be payroll cost that you could use 60% of the money on, and then it's completely forgiven, whether it be salary, wages, tips, vacation, allowance for dismissal, group health care, retirement benefits. So again, the sum of these payments cannot be more than $100,000 in 1 year, prorated from February 15th. But again, if you haven't got PPP, you need to get in on this, because you can get a lot of the money forgiven. It's basically the equivalent of a grant. And I know businesses that have got 7 figures with this and did so successfully because they needed the money to be able to survive. And you can use the loans, again, for many different things, as long as about 60% of it is used for payroll costs and about 40% of it is used for other utilities, such as your rent, your mortgage, or interest on your mortgage, as well as other utilities in the business. You can even use it to be able to pay back the interest on other debts or other debt obligations. So we're talking about the SBA PPP Loan Forgiveness. And again, you can't have reduced your workforce by 25%. We now know what happens if you do. What happens now is the equivalent that you lowered the workforce is the equivalent of loan forgiveness you will not get. We estimated this when it first came out. I predicted that that's how it would work out, and that's how it's worked out. So basically, if you get the wage money from PPP and you use it as you should, 60% now they allow to go towards actual payroll, 40% towards expenses, that money can be forgiven as long as you didn't reduce your workforce by 25%. If you did, then whatever percentage you worked, you reduced your workforce, gets withdrawn. That money will have to be paid back. So again, if you reduced your workforce by over 25%, by an extra 10% over that, well, then 10% of that PPP loan is not going to be forgiven. So that's the way that the PPP loan forgiveness really works. But again, if you didn't reduce your workforce and use the money for the expenses and for payroll, then this is not money that has to be given back. It was the equivalent of a free grant and a lifeline for a lot of us. And I've talked to a lot of business owners where this was their life them through. So it's a big deal. Now, Jennifer says, I started after January, so the SBA sent me a letter saying I didn't meet the requirements. It could make sense because they want 6 months worth of your payroll before that. And if you don't have 6 months worth of payroll to show them, then you're not going to qualify. And Paul says, what if you have no payroll? Then you want to consider a SBA EIDL loan, an Economic Injury Disaster Loan. EIDL loans will give you the money, and it's not a grant. It has to be paid back. But the term goes to 30 years at 3.75% for profit companies, 2.75% for nonprofit companies. And if you don't have payroll, EIDL is the way to go. You can apply directly through the Treasury. You can go right to SBA's website. I can't remember off the top of my head. If somebody knows the link to get EIDL, do me a favor and type it into YouTube, and I'll be able to get that information to Paul. But you can go to creditspeed.com/PPP, and I'm pretty sure we have a link in training on the EIDL loan right there. But the EIDL loan is what you want to go with, because you can get no payroll but be adversely affected by COVID-19 and still get EIDL, Paul. So hopefully that helps you. Jennifer says, everything in Panama City is tourist based. It's bad. I'm in Tampa, Jennifer, and Orlando is an hour and a half from me. As a matter of fact, I'm leaving for Orlando tomorrow, and I'll spend the weekend there with my kids. And I can tell you that they're getting slammed too. It's insane. We're able to go get a 6-bedroom Airbnb for $120 a night. It's crazy because they're getting slammed with this as well. So I'm in a high tourist area. And Jennifer says, but nothing but restaurants and bars. So sorry. Yeah. And a lot of them are being adversely affected. Okay. So other programs from SBA, and this is exactly what Paul was asking about. There's also the EIDL with advances up to $10,000 in a grant. And you can also get loans of 7 figures from the EIDL. There's also SBA Express Bridge loans to bridge the gap while you're waiting for money. There's also debt relief as well. So the SBA automatically pay principal, interest, and fees of your current SBA 7 loan, 7A or 504. If you have a loan with SBA, they'll pay your payments for 6 months. They did that for us. We have a loan with SBA. They paid this was the easiest money that we were able to access through all of that I'm showing you, was we were able to come in and get advance the money or get our loans payments not made for 6 months waived. The SBA will automatically pay principal, interest, and fees of any new loans issued before September 27, 2020 as well for 6 months. So if you already have an existing SBA loan, this will really help you. And with the PPP loans, you don't have to make a payment for 6 months anyways, or up until like later this year. So it gives you time to not make payments and get all that loan forgiven. But what if your business doesn't qualify? Well, a lot of businesses aren't going to qualify for disaster relief, right? Agricultural enterprises, if the primary activity of the business is defined in whatever, if you're an agriculture business, they didn't really have funding set aside for you. Religious and charitable organizations were not allowed to get money through EIDL, but could get money through PPP. So that helps you if you're a nonprofit in that industry. Gambling concerns, if they derive more than 1/3 of your annual gross revenue from legal gambling activities, casinos and racetracks, real estate developers, a lot of these are adversely affected. And it's really unfortunate because I just saw something in USA Today that MGM intends on laying off almost all of their staff because their casinos shut down and the government didn't address them in any of this. So unfortunately, Las Vegas is another area that's hard hit by all this. I'm actually scheduled to go on vacation there for Christmas break with my kids. So hopefully all that works out. So some other companies that weren't able to get money really adversely affected by all of this as well. And Daryl says, just got here, #live. Thanks for tuning in, Daryl. Jennifer says, what's your opinion on the forbearance? Look, I think forbearance is good. I think anytime that you can not make payments, any way that you can get any kind of help through this, I think you should consider it. I think a lot of credit card companies, a lot of auto companies are waiving payments, but you have to be very careful, okay, on any of this stuff and how it reports on your consumer credit report. I have consumer credit experts in my corner. I suggest you do the same. It's worth talking to somebody because unfortunately, the way that some of these companies reported, I've got people that I know in my circle that were told to not make their credit card payments and they're okay from the company, and then the company reported them late. So you have to be very careful on any of those kind of forgiveness programs, forbearance, not needing to make payments to make sure that it's not adversely affecting your credit report. Now, what if you have expenses which the loan can't be used for? Well, and this is especially the case with PPP. What do you do? Well, this is one of the many reasons that business credit really comes into play. I love business credit, and I love business credit for a lot of reasons. First of all, you don't need to have good credit. You don't have to attach a personal guarantee. You don't need collateral. It's not based on your revenue. So in this world, if your revenue is declining, as many of the businesses have, you can still get business credit because it's not based on these factors. This is a really big deal because in the business funding space, the majority of lending in fintech, all online lenders, it all came from revenue lending, merchant cash advances. It all came from programs that lent money based on your revenue being consistent. And when revenue wasn't consistent and revenue dropped, then all that funding went away. All those places indefinitely stopped lending that money. So that became a big problem because the main go-to funding program for our industry, for us as entrepreneurs, went away. And if you have any kind of credit issues, that was the main way that you got money. So with those options gone, what do you do? Well, this is where I think business credit really, really, really is a great way to go. Look, the CARES Act and PPP are popular programs, but you got to keep in mind there's a lot of restrictions. There's a lot of strings attached. Is it a loan? Is it a grant? Does it have to, the money have to be paid back? Does it not? It's all based on you meeting a lot of requirements, some of which we've talked about with how you're spending the money, but also requirements of you have to go through all these hoops to be able to get all the documentation in for it to even be reviewed. And then for months after, they can still come back and at any given time choose to audit your actual loan and get you to pay back money that was once forgiven. So that's over a lot of our heads that got PPP loans. These are things we have to think about. The forgiveness isn't automatic. There's going to come a point where your bank is going to say, we're ready to forgive the loan. Here's all the documentation we need. You're going to have to prove these things, like that you only spent 60% on payroll and 40% on utilities. The day will come, all the stuff has to be proven. And even then, if they approve you and say this money is forgiven, you still have to keep in mind that there's a real possibility that they may audit you 6 months or 12 months down the road and tell you that part of that money does have to be paid back because SBA or the government chooses to review your income docs versus just the lender. So there are strings attached. So some things to keep in mind, even if you did get this money, it's some things to think about, right? And Jennifer says, I've heard people are getting screwed. A lot of people with PPP loans, et cetera, as well. And I just did one on how to not get scammed by PPP about 2 weeks ago. So it's worth checking out on our Facebook and YouTube. Questions about business credit, and we'll be diving in and getting started right now with business credit as well. And Jean Pierre says, how many accounts do I need to have reporting exactly to get approved for Office Depot, Home Depot, Lowe's, Staples, and Amazon, regardless of revenue type of business? There's no way I can answer that question. And the reason for that is, Jean Pierre, is that you're asking specifically about 5 different credit accounts. They all have different trade line requirements for approval. But give us a call, 877-600-2487. We can walk through that with you. And Jean Pierre, just a reminder, like if you're a client, our system tells you all of this, but I would need to go in, fire up our system, look at every single source to tell you that, and not enough time on this webinar to be able to jump into and do all that. Andre says, when you order from a vendor that represents as one trade line, if you order from the same one again, it only represents as one trade line. So I've got a buddy that just got the ability to report their credit line hybrid payments to the credit bureaus. Credit line hybrid, for those that don't know, you can get $150,000 in credit lines, 0% interest rate, no doc financing, take the cash out on the credit lines. All you need is a 680 FICO score for you or a guarantor, and they're going to look at inquiries, utilization, et cetera. The nice thing about credit line hybrid is that it helps you build business credit as well. But our source that does that, if when you make your payment on that, when you pay your invoice for them doing the service, they actually report that payment to the credit bureaus. They report that payment to Experian, and even they tried to sell multiple products and got multiple trade lines. The bureaus allow one company, one trade line. So even if that company sells 12 different products, they can only ever give you one trade line from them. It's a great question, Andre. I've never been asked, but that's how the system works. Daryl says the film production industry was left out depending on how you classify your business, but revenue are 1,000% up for content that's completed before the shutdown. That's interesting. I appreciate that. And Jennifer says awesome. So let's talk about business credit. Well, business credit's tied directly to your business EIN, not your personal social. So hence your business credit must be built to buy the goods and services it needs, and inquiries for business credit don't go on your personal credit. So a lot of benefits here of why you want to build business credit. You need to keep in mind you own a business, and here's you. You're two separate things. So you also have two separate credit profiles. And a lot of people, the problem they have in business is they try to use their personal credit profile to fund the business entity. And there's a million problems with that. Score, Inc., Forbes, Fortune, you name it. Any of the authorities in the space, even SBA, tell you it's a really bad idea to use your personal credit to try to fund your business. And here's why. Your personal credit wasn't designed to do this, guys. Okay, business credit limits are 10 to 100 times higher than what you're going to find in the consumer world. When you do what I'm going to show you, business credit limits are $500 to $2,500 from inception to start. If you're using that credit, then you're going to be talking about $5,000 to $20,000 limits 30 to 60 days into this process. You'd never see that starting a consumer credit profile, but there's a reason for that. We need higher limits as business owners because we spend more money, okay? We literally spend $150,000, $200,000 every month on our credit cards, and we pay that amount off, okay? I never do that as a consumer. I mean, that's insane. I would never spend that kind of money. This is why limits on business accounts are so much higher. And this is why your company needs its own credit profile and score, so the company can qualify for the goods and services that the company needs to operate, right? And this is how we get away from personal guarantees. It's how we get away from being personally liable for what happens in our business. It's where we get away from having our credit profile for personal use for business, and we create this separation. It's where inquiries stop showing up on our personal credit reports for the business, and they start showing up on business credit reports because we're trying to get money for the business. Bottom line, it's a way for your business to fund itself. And that's what business credit is. It allows your business to get funding based on your business even existing. You come in, you start building your credit profile and score, then you use the established credit profile and score to buy stuff you need for the business. And then you pay off the bills. And then you buy more stuff you need and you pay off the bills. And the more you do this, the higher the limits you get on future approvals, the more credit you can actually qualify for. Jean Pierre says, hey, I have all these accounts. How many do I need to qualify for each of them? Well, the answer is different for every one of those accounts, but he asks a good question. How many accounts do I need to get A, B, C, D, E, F? Because a lot of these approvals are based on you having 3, 4, 5, 10 accounts. Now, I will tell you, Gene, that I actually recommend that you have at least 5 to 8 accounts before you even get into any revolving store credit. And ones like Staples, et cetera, start to open up at that point in time. But again, how many you get to start to build credit, you get accounts, and then that opens up the door for you to get more and more funding for your business. Basically, again, you're letting your business fund itself. And the nice thing about this is you can do it pretty quick, because business credit scores are based on how you pay your bills. And consumer credit scores are based on all kinds of other factors. So all you have to do is get credit reports, pay your bills on time, and then you're going to have good scores. You use the good scores in the established credit profile as a foundation to build off of and get all kinds of credit. Now, in order to do this, you've got to be set up with the IRS. You've got to do some things to get set up initially. You've got to come in and make sure that your business is set up fundable. And we call this fundability. Fundability is all the secret requirements lenders and credit issuers have that you must meet to be able to get approved. I talk about fundability all the time because it's the #1 reason loans get denied. Your loan, your credit card, it's not getting denied because of your credit. It's not getting denied because of your income. The vast majority of denials come from discrepancies in these areas. And this is why I preach about it so much, because if you just fix the basics of your business, then your ability to get loans and credit cards at the terms you want to get are there. And if you don't do this and you're skipping this step, because to be honest with you, it's boring to even focus on, then you can't complain when you don't get the money you want. You can't complain when your interest rates are too high, when your loan terms are too short. You're doing it to yourself because you're not fixing the things that lenders and credit issuers want you to have fixed. So you need to have a professional website. You need to have a professional email address. Stop using AOL, Gmail type addresses. You need to have a phone number for your business. It needs to be toll free. You need to get your phone number listed with 411. The only way you can list it yourself is through a company called listyourself.net. We pay $30 a month, or that's $30 a month for you to be able to get set up with them the right way. We pay that for our clients. It's so important. You need any necessary licenses you need to have for the business. You need a bank account set up for business expenses. You won't need to verify the bank account when you get business credit, but they're going to ask you for bank references. You won't have a banker for a bank reference if you don't already have a business bank account set up. And again, all of this information needs to be congruent. That is the #1 reason that loans get denied, because all kinds of stuff changes on your Secretary of State and you forget about it. You don't even think about it. And then you go back and it's all different. Okay, so we're going through an address change right now. And guess what? We got to change that Secretary of State record, because if you don't, that's what lenders look at. Lenders get an application. They think it's fraud. They pull your Secretary of State records. And guess what? The name, the address, the phone number, the information on your Secretary of State isn't the same as your application. Well, the fact that that's wrong makes it look like fraud. So they deny the application and you think it's because your credit's bad. You think it's because of your income. And the reality is you didn't get through the first primary check of your Secretary of State actually matching your business data. Now, a lot of you may hear this 10 times from me, and yet you've yet to actually go to your Secretary of State and actually look at your business information and make sure it's all up to date. Do it now. Go. In Florida, it's sunbiz.org. If you don't know, go type in Secretary of State into Google and for your state, pull up your Secretary of State record, look at it, and make sure your information is congruent. All the stuff has to be congruent to avoid getting denied. Okay, you also need to make sure that you have your business entity set up, that has an EIN. Believe it or not, you can have a business with no EIN. That's called a sole proprietorship. You don't need an EIN for a sole prop. Okay, but you need to get the EIN. The business credit profile is built under that EIN. It's essential. preferably get a corporation, preferably get an LLC, maybe even a partnership. But you need to avoid at all costs sole proprietorships. Sole proprietors are audited 1 out of 7 times. Corporations are audited 1 out of 50 times. Not to mention, as a sole proprietor, you are the business. If somebody sues you, they sue the business. And lawsuits can completely put you out of business, any of us. So you've got to be really careful, because as a sole prop, you are the business. You want to separate that so you can separate your liability and credit profiles. It only happens if you choose an entity other than a sole prop. Consider a corporation, consider an LLC. A corporation makes you look as legitimate as you can. Once you've done this, once you set up your credibility the right way, and again, I'm not just done there. There's actually over 125 factors that tie into fundability. I went through like 8, right? I didn't even go through 10% of them. But my easy answer to you on how to do this is, when you fill out an application for credit, every single line item, every box that's asked for a question, think about if it makes you look credible. If they ask for your address, is the address you're looking credible? Or are you using a PO box or a UPS address? You shouldn't be using those. If you're entering a phone number, is it a mobile phone? Is it a home phone? Or is it a real business phone? Lenders and credit issuers are going to know. So you need to make sure that you have everything that makes you look credible. A lot of people question fax numbers. Do we really need a fax number in this day of age? Do they ask for a fax number on the application? If they do and you don't have one, does it make you look less or more credible? The answer is less, right? With 100%. So you need to have those things so you look more credible. Now, will most applications ask for you a fax? No, most of them won't. But you need to have a fax for the ones that do. And you can even set that up with a voice over IP number through a place like Freedom Voice or Ring Central as well. Okay. Jennifer says, on your video I watched yesterday, you had said there were layers, or for lack of a better term, I'm not sure exactly what you're referring to, but yes, I think when it comes to business credit building, there is, and these are called tiers. And we're about to dive into this right now. Denise says, how does UCC filings affect your business credit score? It's a great question. I love this question for multiple reasons that you're all going to learn from. First of all, a UCC filing is something that a lender will file to tell people that you have a loan. So they're going to put a UCC filing on your business credit, notifying other people that you have a loan. A lot of reasons that you need to know this. Let me give you an example where it goes bad. When we went to get an SBA loan, they required that we basically get the UCC filing removed from our credit report or prove that it was paid off. The problem is the bank was out of business. So they never removed the UCC filing from our credit report. And at the exact same time, like, we proved that we paid it off, but they wanted all this proof in letters from the actual credit issuer, but the lender had closed. So there's problems, because once these UCC filings get on, the lender has to remove them. If the lender went out of business, like in our case, it creates issues. It delayed our ability to get SBA loans. Second point I want to make here is that a lot of people will tell you, yes, we report the loan to the business credit reporting agencies, but you've got to be careful, because a lot of times they're not reporting your loan payments. You're not getting favorable, good credit for making your payments on time. They're actually reporting what Denisha, hopefully I pronounced that correctly, Denisha is saying here, which is they actually put a UCC file. They put something there notifying other people you have a loan, but nothing that actually benefits you or benefits your payment history. So something you always want to do. When I get a loan, I always ask, where do you report the loan to the business credit reporting agencies? If they say yes, then I say, how do you report it? As a UCC filings, or do you actually report my loan and my payments? And that's a good question to ask. Even before I apply for a credit card or loan, or before I actually sign off on the dotted line, I always make sure I ask those same questions. Those are things that I think makes a lot of sense for you to ask. Jean Pierre says, I have 7 approved accounts, and now it's just a waiting game. 2 more months to go with Quill. So I asked, so I can be certain. I get it. But Jean Pierre, like I said, give us a ring on that. Our number's right here, because you're asking about underwriting requirements for 5 different accounts, and to pull up our system and go through that would literally take 15 minutes to do. And I don't want to take everybody's time today to do that. But if you give us a call, we can help you with that as well. And Jennifer says, and you say all the same on Yelp and all that, right? Yes, correct. Because Dun & Bradstreet looks at Yelp. Dun & Bradstreet looks at your Facebook page. Dun & Bradstreet, they have these electronic crawlers that crawl the web looking for data. And your Yelp, your Bing, your Yahoo, your Google Places for Business, all of that needs to reflect the same information. Now, there are services like Yext, Y-E-X-T, Yext, that will, you enter your information one time and then they update it everywhere across the web, most places across the web. Yes, it's expensive, but there's other ones like them that will do that and update your information across the web in one place. So something to look into as well. And Jennifer says, how do you get a virtual address? You can go to creditsuite.com/virtual, and that's our preferred source, which is Alliance. But there's also Regis, there's also DaVinci. Those are some of the top companies that sell them. So once we've improved your fundability, now we really have got to start building your business credit reports for the reporting agencies. And that starts with Dun & Bradstreet. So Dun & Bradstreet's the largest of the 3 business credit reporting agencies. We're mainly concerned with D&B, Dun & Bradstreet, Equifax, and Experian Commercial. Okay, D&B has about 230 million records on file. Experian has 20 million. So I tell you that so you can see the discrepancy in size between the reporting agencies. D&B is 10 times bigger than their next biggest competitor in this space, Experian. They are the gigantic 800-pound gorilla in this space. So you want to get a DUNS number with Dun & Bradstreet, okay? That's going to be needed to get their score called a Paydex score. So to get a Paydex score with Dun & Bradstreet, you need 2 things. You need a DUNS number with them. You need 3 accounts reporting to Dun & Bradstreet to get a credit profile or to get a credit profile created. I get this question all the time. Ty, why won't D&B create a credit profile for me? Only 2 reasons. You don't have a DUNS. You don't have 3 accounts reported to them yet. Once you have both those, they will actually create that. You need both in order for them to actually issue that payments, that actual payment score. Now, if you want to see if you're set up with these guys now, go to creditsuite.com/reports. Equifax, for some unknown reason, no longer issues credit reports. So for right now, there's a sabbatical where Equifax, you can't even get credit reports. So you can no longer do a free search here for Equifax, but you can do a free search with D&B and Experian, and you should before you get credit monitoring. Go there to do a search, and a result will pop up to tell you whether you have trade lines, you don't have trade lines, or they don't even know who your business is. Very important with Experian, because Experian and Equifax will create a failing credit report score for you even if you have no credit. Is that you or not? You only know if you go do that free search at creditsuite.com/reports. If something does pop up, that's when you want to start getting credit monitoring. And you can get credit monitoring at creditsuite.com/monitoring. That's creditsuite.com/monitoring. Guys, look, I'm not trying to sell our monitoring. Our monitoring is $24 a month. We are the cheapest in the world for credit monitoring, and you get D&B, Equifax, and Experian with that. If you went to D&B, Equifax, Experian directly for that, it's $250 a month. The reason we worked out a deal with NAB to make it $24, okay, they gave us a wholesale price, and instead of us racking up and charging a bunch of money like we could, we made it super cheap because it's very important to me that you be able to access and monitor your credit reports. And let's be realistic, for $24 freaking a month as a business owner, you can monitor your current commercial credit reports, and you should be, because they're public information. Your prospects, your clients, your competitors, your suppliers, vendors, credit issuers, lenders, they all look at this. And they all look at it to look at your credibility. So you need to be managing that. And so we created creditsuite.com/monitoring and created a $24 product to monitor it, just because that way you have no excuse. Like, it's super affordable to do so. But again, don't pay for monitoring if nothing's out there to even look at. Go to creditsuite.com/reports first. Do a free search to see if anything is on your credit reports. If nothing shows up, don't get monitoring. But if something pulls up, then you want to go ahead and get monitoring, because it's worth monitoring them the minute things start to appear on your credit reports or those credit reports are populated, okay? And Jennifer says, do net accounts count? Do net accounts count? They do, and we'll talk about net accounts right now as we jump into vendor credit. So an easy way to start building business credit is what's called vendor credit, okay? And these will offer what Jennifer had mentioned, which are net terms. So I'm going to give you 2 examples, net 30 and net 55, very common terms. A net 30 account has to be paid back in its entirety in 30 days. A net 55 account has to be paid back in its entirety in 55 days. Simple example, I go get Quill, I buy a bunch of office supplies, I spend $1,000. If I have a net 30 account with Quill, I have 30 days to pay $1,000, what I borrowed, back in its entirety. It's not like I can make minimum payments. So it's like somewhere in between a revolving credit card and a secured credit card, right? A secure credit card, you got to put all the money down up front. Revolving, you pay a little minimum payment over time. Net 30, you have to pay it back within net 30. Net 55 within 55 days. So that's what net accounts are. So you can get credit with what are called trade vendors. And what trade vendors are they're basically people that sell products and services, and they will give you credit to buy their products and their services. So it's like giving you a store credit card to buy the stuff in their store. And then when you buy the stuff, they report those payments to the business credit reporting agencies. So Uline is one of my favorite of these. They report to D&B and Experian. You need a DUNS number and an EIN, and you need to make sure that you have your fundability stuff that I've talked about set up, and you can get approved with them. They sell shipping supplies, office supplies, industrial supplies, one of the easiest to get approved with. So this is very important. The fact that they report to D&B and Experian is extremely important, because this is what we call a payment experience. So a payment experience is the reporting of an account to a business credit reporting agency. So an account that reports to two business credit reporting agencies counts as 2 payment experiences. And here's why this is important. When Jean-Pierre comes in and says, I have 7 accounts reporting, well, and I'm not sure if this is his case or not, he needs to have at least 5 to start to move on to revolving credit. But it's not 5 accounts, it's 5 payment experiences. Okay, so what happens is if he has one account that reports to multiple reporting agencies, he can build business credit faster. It's one of the ways that we help condense years of business credit building to only months, because our finance suite lists every account and who they report to. So then that way, like, you know that one account reports to 3 reporting agencies. You want to get that first because it's faster to build business credit with that account. Now, Quill reports to D&B only, okay? And they'll give you a net 30 account. They're harder to get approved with right now during COVID-19. They've tightened up. They would prefer that you have other accounts reporting to them to get approved. If not, they may make you place 2 orders first before they'll actually give you a credit line with them. But I love Quill because they do report to DB. They still will give you credit, and they sell everything from computers, shipping supplies, office supplies, over 1 million products in its entirety. And then also Granger Industrial. And Jennifer says that's amazing. I appreciate that, Jennifer. They sell hardware, power tools, electrical supplies, pumps, more. They do fleet maintenance. They report to DMB, and you can get approved at Granger.com. I'm giving you these trade vendors for a reason. They're super easy to get approved with. I mean, these are the ones that minimal requirements you need to get approved. You need to make sure your fundability is not jacked up so you look halfway legit. And you need to, go through the steps, get your DUNS number set up. Some of them want to see that. You need your phone number set up, toll free, all the fundability stuff. You need to have an EIN, all the stuff I covered. But if you meet those basic requirements, they'll approve you for credit that reports to the business credit reporting agency. That's why Uline, Quill, and Granger remain 3 of my favorite of them. But this isn't the only option here. We've got Strategic Network Solutions, which offers another really good starter account. Crown Office Supplies offers another great starter vendor account. And don't forget, if you have good personal credit, well, then you want to get approved for Credit Line Hybrid. You can get approved at creditsuite.com/get funding. With this program, you're getting 5 to 8 credit lines, real credit lines, cash credit lines, Visa card, MasterCard credit lines. They report to the business credit reporting agencies. A lot of them report there. Some report to consumer. You'll have a choice whether you only want business reported or max funding that gives you both. You get 0% interest rates for 6 to 18 months. Nothing better than mitigating a recession than 0% interest rates. You get approved for up to $150,000. It's no doc, so you don't need bank statements. You don't need any kind of tax return. So even if your revenues slip during all this, it doesn't matter. All is still good. You just need a 680 FICO score of you or a guarantor. Family member, friend, business partner, anybody can work as a guarantor. And if their utilization is less than 40%, less than like 6 inquiries in the credit report, then you can get approved for 5 to 8 really high credit lines, $10,000, $20,000, $30,000 limits. So you can imagine if you start building business credit with $10,000, $20,000, $30,000 credit limits, then your ability to get other credit limits much higher is way greater. Consumer and commercial credit work very similar to the same. You're going to get approved for about how much you have. And let's talk about the consumer space. Consumer space, your credit limits that credit card issuers give you are pretty equivalent to what you already have. So if I have a Chase card for $10,000 limit, then if I go to apply for a Discover, good chance I'm going to get a $10,000, $11,000, or $12,000 limit. They may be a little bit higher than Chase because they want to be my highest limit account, but not much higher. My limits are going to be pretty close to what I already have. In the commercial credit space, what matters more than your limit is how much you spend. So if you pull a commercial credit report, they don't even have your credit limits on them. Now, lenders and credit issuers see it, but you don't. But what they do have is how much you recently spent on that account. So it goes to tell us that with commercial credit, what matters is getting credit you actually will use. And I see a lot of people mess this up. A lot of people try to build business credit just to get a Visa card without a guarantee, or just to get a MasterCard without a guarantee. That makes no sense. 90% of whatever you need to buy, you could buy at Amazon. You could buy at Walmart or Staples or Office Depot or Lowe's or Home Depot or Sam's Club or Costco, all the places you can get corporate revolving store credit cards with, okay? So you need to make sure that you're actually coming in and using the credit you get. Don't build business credit just to build business credit, move to the next tier. You want to use the credit you get. It's essential to get the limits high enough to be able to move on to the next tier and continue to get higher and higher limits. If you get 5 vendors and the most you spend is $100, when you get to revolving store credit, don't expect to get a $10,000 limit. Why would somebody give you 10 grand when the most you're spending is $100? So you want to get credit with creditors you're really going to use and use the credit, because that's what will get your future limits higher on Visa card, MasterCard, auto financing, all the stuff that you really want to get. And Chuck says, what banks report to the credit card agencies? I'm thinking about getting a secure business card. Any advice? They all report to the business credit reporting agencies on some of their products. Some of their products is the catch. You have to figure out which one it is. And the answer, the best, is to just ask them. So all banks have products that report, Barclays, Chase, Bank of America, but again, or almost all of them do, but they only have some cards that report, right? Bank of America has a lot of credit cards they offer, and only some of them report to commercial reporting agencies. So you have to ask them that question. The other thing you're saying is, I'm thinking about getting a secure business card. My advice is try Wells Fargo. They used to have a good account that reported to D&B, but they stopped reporting it to D&B. And to be honest, there's not a lot of secure credit cards in the commercial reporting agent world that report to the consumer credit reporting agencies. So Wells Fargo is my only advice, because none of the other banks that I know of have a good secure credit card that reports to the commercial credit reporting agencies, Chuck. And Vicky says, this might be a dumb question. No such thing. Well, there is, but I'm sure it won't come from you. When setting up these net accounts, when paying them off, are we paying them off with our business credit cards? It doesn't matter. It doesn't matter how you pay them off. You have to pay it off. So if I have a U line that I owe $1,000 to, I can use my own credit card to pay off that $1,000, or I can use cash. I have that choice. But something that is important here, Vicky, is when you pay it. Commercial credit scores are based on when you pay your bills. Literally, that's exactly what they depict, how early or late you pay your bills. In the consumer world, as a consumer, I can go 30 days late before anything's reported late. In the business world, 1 day late is 1 day late. So you never want to go late. As a matter of fact, you want to pay as early as you can after the item ships. If you pay it before the item ships, it will count as cash transaction and nothing will get reported. But if you pay them after the item ships, then you'll have the highest score you can have. So when I order stuff from Quill and Uline, man, the minute they ship it, I log onto their account and I pay it. When I use my Staples or Office Depot, they won't let me do that. They make them populate a statement before they'll let me pay the bill. So it's different for all of them, but pay it as soon as you can after the item actually ships. Andre says, from YouTube, do you have an account from different vendors in order to get multiple trade lines accounts on your business credit report? If you get one account, for example, when we talked originally about Uline, that would report to 2 reporting agencies. So it would only count as one account, but to 2 different credit reporting agencies. Okay. But outside of that, one account is the reporting of one trade line on your credit report. And Daryl says, hey, from YouTube. Hey, Daryl. Ken says, hey, Ty, is your guy still doing SBA PPP? He is, Ken. You can go to creditsuite.com/PPP, fill out our guys a form, and we'll get you to my guy. My advice, use your own bank first, because they're not going to charge you any upfront money. They're not going to charge you a fee. They're going to let you do the loan the easiest if they have their stuff together. If they don't, or you're not confident, then go to my guy. My guy will charge you a couple grand up front. He absolutely will. He charges us a couple grand up front. He charges you 1% total fee. He charges us 1% total fee minus the 2 grand. But my guy got our PPP loan done when these things first came out and everybody was crazy. They got it done from the time we actually applied to funding in 72 hours when nobody else was getting it approved for weeks. So my guy is phenomenal, and you can find him at creditsuite.com/PPP. So the next steps in your business credit building journey is retail and fleet and cash credit. So these are based on tiers: the retail credit tier, the fleet credit tier, the cash credit tier. Here's how it works. Basically, you need to get credit with places that report. You need to pay the bills early and on time. That's the key, but it'll take you at least 5 payment experiences to move on to retail credit. If you then come in and you move on to, if you have about 8 accounts reporting, you can move on to fleet credit. Fleet credit are fleet credit cards. These are used for fuel. They're used for repairs, maintenance of vehicles, really big for people in the transportation space, like over-the-road truckers, for example, okay? And then you also need about 14 accounts reporting, and one of them needs at least a high credit limit of $10,000 to move on to a Visa card, a MasterCard, American Express card, et cetera, et cetera, et cetera. And that will also get you auto financing. So let's look at these tiers again. 5 accounts to get to retail revolving store credit, Office Depot, Home Depot, Lowe's, Sam's Club, Costco. It'll start to get you approved for those. With 8 accounts reporting, you're then able to move to fleet credit, fuel, repair, maintenance. With 14 accounts reporting, you're at the final tier. Visa card, MasterCard, auto financing as well. And to give you an idea of how our clients do this, this is just why our clients get so much better results so fast. We basically break it down into the tiers of when to apply and what to apply for every account. So then this way you can come in and you could see that, and I think this is one of the questions that Jean Pierre asked, so we'll look at Office Depot. So we can tell that we need to have at least 4 accounts to get Office Depot. You can see the actual underwriting guidelines. You can see who they report to. You get the back bat link to be able to get approved. We do this with every single source. So Visa card, MasterCard, auto financing, all the retail credit, almost every type of source you could even imagine for credit and financing, from Amazon to Sears and Lowe's in between. It's all available and all this information. That way, you know, if you apply for Chevron, you're getting 3 payment experiences, et cetera. So I want to give you some tips, because there's a reason our clients get this done in 6 months and other people take 2.5 to 3 years. And I want to give you the tips on how they do that. First of all, knowing how many accounts you actually need reported to get these credit cards is important. Knowing where they report is also important. Knowing their underwriting guidelines is also important. Knowing the tiers of credit or the order to apply with for certain credit, you know, Office Depot versus Staples in what order, is also important as well. And by doing that, you're only applying for credit you can actually get. So you can see here, these all say learn more in our system. And the reason they say learn more is because I don't qualify yet. Per the profile I've set up in here, I don't have enough trade lines to be able to get approved. If so, these change to get approved, because that's really the key. If you want auto financing, if you want computers with Dell, if you want to get one of our clients got 185,000 approved at Ford. The key to all of this is knowing all of that information. And that's why it takes people a long time, because if you don't just have a system like this and advisors that just make it all available like this, then you have to figure a lot of that stuff out on your own. And that is the time-consuming part of business credit building. But I also gave you a lot of secrets of how to actually do it successfully as well. Okay, and let me see. And Michael says, I've had a Crown account for about 6 months and they still haven't reported. Call Crown. Because the reason might be you're not spending enough money with them, but they should report with at least within the quarter. So I would never go more than a month without asking the credit issuer if they haven't reported why, because Crown does a pretty good job of reporting, Michael. And Denisha says, do I have to join Credit Suite program to get a list of the high limit accounts with documentation? I already know established business credit. I already know. If you already have established business credit, give us a call, 877-600-2487. We've got a way more affordable system for people that are already 50-70% of the program or through the process that can help. But we don't release lists. And the reason is it changes daily. We have a data team, and all our data team does is they just keep relationships with all credit issuers. And we literally are daily checking all the credit issuers' guidelines and updating our system for the information to be accurate. If I release a list today, then in 2 days it's outdated, and then people start to complain that we have outdated information. So we did that many years ago and gave up because the information changes so often that now we just maintain lists in our system, as I just showed you, and our advising team and our data team actually manages that. And Amin says, how much monthly to be a client? You can go to creditsuite.com and look at our pricing. It's different based on our programs that we have. Our main program for business credit building, financing, fundability is about $3,000, and you can break it down into payments of less than $600. If that's not affordable for you, we can work with you on much more affordable program payments as well, and work out a special payment plan. And also, as Denisha pointed out, people that are 50-70% of the way, we have a system where our advisors aren't part of the process, but it's much more affordable because our people aren't involved, only our software is. And those are options that could work for you as well. You can give us a call. We'll talk through that. So good business credit's going to help you get loans. Okay, look, whether lenders and credit issuers tell you about this or not, your business credit's used to determine if you'll get approved, how much you'll get approved for, and the rates and terms that you will pay. Okay, that's the way business credit works. It's used by all lenders and credit issuers. Your business credit reports say how much money the credit bureau is recommending you even be lent or issued in credit. Your credit score determines the interest rates you pay. So if you want to get the best loans, the best terms, you got to build business credit. It's the key. We work with a lot of $10 million plus businesses that come to us in shock because they're trying to get loans and credit lines and realize their business credit's a barrier. And then we're helping them quickly establish business credit to get loans and credit lines. It will stand in your way. It's imminent that it will. Your EIN connects to high scores. The lenders won't feel the need to demand a personal guarantee. The more credit you get, that's the way the system works. The more credit you get, the more of it you're able to get without a personal guarantee and credit check. So a lot of things happening with this recession. A lot of businesses impacted. Financing world is impacted as well. But again, you really want to come in and make sure that you can access all the capital that you can. You can get approved for our credit line hybrid at creditsuite.com/get funding as well. And a business credit's really going to help you a long part of the way as well. If you're looking to get loans or credit lines, we never charge you any money to do that. Okay. The lenders will charge you normal rates and fees. We negotiate that to get that cheaper for you because I think it's stupid. When we started Credit Suite, it's so frustrating to me that like if you wanted to get a loan, there was nobody out there you could just call that worked with all lenders and credit issuers. So that's a problem we've really worked on fixing over the last 8 years, where we pulled together all lenders and credit issuers that offer legitimate programs into one place. We have over 1,000 sources. That way you can access all money through talking to one person. And our funding team will do that for you, 877-600-2487. We don't charge you any money to get funding at all. Nothing, zero, not a dime. Sometimes the lenders pay us a referral fee. Sometimes they don't. It doesn't matter. For us, it's about helping you get the money. We don't charge you for that. And we've got a paid business credit program that will literally cut you down from about 2.5 to 3 years of doing it on your own down to about 6 months. And I showed you a little bit of our software to show you how that's possible. So we can help you along the way. Give us a ring, 877-600-2487. Email us, info@creditsuite.com. Get approved for funding at creditsuite.com/get funding. We also have a great free guide. I'm not sure if I listed here on these or not. That you can get as well as creditsuite.com/live and get a great free guide with more details on business credit building. Over 1 million downloads, 1 million downloads on that guide. So it's pretty popular, as you can imagine. And we also will do a free consultation with you for business credit. Here's what happens on a consultation call with us. We do a fundability check. We check your Secretary of State and other places to make sure your fundability is not all jacked up. Okay. Then we also help you get your business credit reports with Dun & Bradstreet, Equifax, and Experian for free. You don't pay anything. We help you get the free reports with all three of them. Then we also determine all the funding you can qualify for now. We tell you about all the loans and credit lines you may qualify for that you don't even know about. And we give you any tips and tactics that can help you build business credit on your own, or we'll talk to you a little bit more about working with us and make sure that that's affordable as well. So you're entitled to that free consult call. Give us a ring for that. And if you like this, when we go live Tuesday and Thursday at 1, 11 o'clock on Wednesday, all Eastern time, with training like this. Tomorrow, we're talking about your business credit scores with Experian. I'm going to decode 5 business credit scores with Experian, teach you how they all work, and I'm going to tell you how to beat the bank, beat the bureaus, beat the actual bureaus, and control your own scores. Like, did you know that submitting financials to the credit bureau can be done and it radically determines how good or bad some of your scores are? A lot of people don't know that. It's the kind of stuff we're going to be diving into tomorrow. So if you like this, then like and subscribe. If you got value from this, do me a favor. Give me a like, give me a love, give me a share. I see it in real time. And that means a lot to me. We do a lot to put together the research for all this and to also be able to come in and teach. So all I ask is if you got value, give me a like, give me a love, give me a share if you don't mind. Okay, and then subscribe, and we'll notify you when we go live. Our Facebook and YouTube are scheduled the week before. So at the end of this week, we'll schedule our live streams for next week so you can even see what's going on. If you got value from this, daily Instagram and Twitter tips, as well as we have a podcast called The Business Credit Financing Show with over 400 episodes, over 350,000 downloads. So very popular, where we teach business credit financing. We have all kinds of industry experts that come in and teach you everything from how to save money and get max compound interest, all the way to how to buy businesses instead of actually starting them and building them. A lot of cool stuff on that podcast, so make sure you check it out. Okay, and I appreciate it. So everybody else that answers your questions, I will see you all tomorrow at 11 o'clock Eastern here on Wednesday on YouTube, where we'll be diving into your commercial credit scores with Experian. I'll be pulling back the curtain, decoding them to help you maximize your credit scores, so that way you can get the best money, best terms on the money that you want to get when you need it. Thanks, everybody, for tuning in. I'll see you tomorrow at 11 o'clock Eastern here on Facebook, YouTube, and Periscope.